Alphabet, or Google stock, earlier today announced that they were laying off thousands of their employees. Surprisingly, Google stock rallied on the news between 4 and 5% so far today. I personally bought a little bit more Google stock in the last few weeks on some of the lower prices. I called it out to my subscribers at Unrivaled Investing. So in this video, we're going to talk about what's going on, why Google is doing this, what this potentially means for the share price, what this potentially means for the business in the quarters and years ahead. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. If you enjoy educational investment videos, please make a point of hitting that subscribe button. So let's understand what's going on. Well, first of all, Google announced that they're laying off a little more than 6% of their workforce, around 12,000 people. My heart and sympathy goes to the people impacted. Nobody wants to wake up on a Friday morning and say, you know what, you don't have to come into work today. You can work from home today because you're getting laid off. And that's literally what it said in the memo, saying, hey, if you've been impacted, feel free to work from home. And so it's a really, crappy thing to do. And the reality is they don't want to do it. I personally, was a CFO for a fast growing startup company that had a few million in revenue, quickly grew to around 40 million in revenue. And, I overseeing, the budgeting and the forecasting section, it's very clear, you have a budget, you have a forecast for where your revenue is going to be, you have a hiring plan. And, based on the growth, and Google's supposed to be a growing company. So when you see something like this, you see that they're laying off 12,000 people, 6% plus of their workforce. That means what they were forecasting in terms of growth, that's not panning out, because this is you don't suddenly lose 5% plus of your body weight in a day unless something, really dramatic happens. So this saying, hey, we had this budget maybe for the fourth quarter of 2022, first quarter of 2023, this isn't going to budget. And so we have to make some adjustments. And unfortunately, this is impacting 12,000 people once again. And it's an unfortunate part of where we are in the economy right now, where you're seeing an economic slowdown. Unemployment is still low for the economy, around 3.5%. But you see a lot of companies like Google announcing these layoffs. And this is, once again, my sympathy goes to these people because, in 2 months' time from now, they're going to say, hey, how am I going to pay for my mortgage? Or how am I going to pay for, childcare? And so it's really very tough. So it's a tough perspective. So let's go back to understanding, well, what's that mean for Google? Well, Google's not alone here. I mean, this actually makes the picture a little bit even worse when you consider that Microsoft, Amazon, a lot of the leading tech companies have also been laying off folks, more than 70,000 people in the past year. Once again, unemployment for the aggregate is still quite low, around 3.5%, but you are seeing tech, with significant layoffs. And it's not just, one given segment within Google. They're even targeting their AI unit, saying, hey, yeah, it is a key source of investment, but they are not a sacred cow. We are going to have layoffs here as well. This does, in my opinion, reflect how serious Google is in saying, hey, we weren't going to where we wanted in terms of a budget perspective, so we need to make sure our costs are aligned to where our business is versus where we wanted it to be. And so that is an important data point to consider, that this whole business is going under the scalpel, where they're saying what needs to get cut because things aren't performing the way we want them to be. And you even see it on the margins, where previously, you had your year-end bonuses that would get paid in January, but they're saying, oh yeah, well, we're going to pay out 80% in January, but now we're going to only pay 20% in March. So you're not getting the full 100% that you previously would get. And they're saying, oh yeah, well, we've been communicating this, and going forward, the bonus will be paid in March. It's uncomfortable when you see these sorts of things. It reminds me of a Dave Chappelle skit with Wayne Brady, and like, gonna have to get some money type of thing. Like, where's my money, man? And that's what a lot of employees are waking up to, saying like, hey, where's the 20% of my bonus that you said you'd deliver? And so there's a lot of like unfortunate developments that you see here going on with Google in terms of clearly looking to manage their margins and profits. And so you look at this and you go, well, why is the stock jumping higher on this news? Why is it up between 4 and 5% so far today, given that you're likely facing a deceleration in the business? Well, first, if you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for annual subscribers. I also recently launched 2 new investment courses for enterprising investors, those that want to understand financial statements and be able to say, hey, does this stock trade in an expensive or a cheap valuation valuation, understanding financial metrics. I see a lot of people get burned the last 2 years because they just didn't understand core valuation. So that's why I launched this affordable courses for investors that want to, sort of take their own, financial journey in their own hands. In full disclosure, this is not financial advice. I do own some Google stock. I think part of the reason why the stock is rallying actually has nothing to do with the layoffs. I think it actually has to do with another headline that came out just earlier today, that Google is making an effort to reach out to their co-founders, Larry Page, Sergey Brin, to say, hey, we need help combating potentially ChatGPT and the emergence of new language models. These two founders still have a controlling stake in Google, worth tens of billions of dollars. So I think, and they've been a huge proponents of AI to say, hey, like when the original Gmail products, were improved, and they say, hey, isn't this so great? Their pushback would be something like, well, how come it's not writing the email itself? And so you're getting in that direction where now you could have the emails write themselves if you put a prompt into ChatGPT, which is owned by OpenAI, which Microsoft is considering a huge investment in. I've called it out previously. And so this is, as I already called out, a code red for Google. And so you are getting the founders back. And if you have sort of the laser focus of the founders, and they've previously just been interested in sort of the pet projects, the moonshots, for them to come back and say, hey, we need to make sure we solve this and we own this and we do this in an intelligent way, and it's not just some sort of haphazard approach, that does sort of decrease the probability that they mishandle this. Because as I've called out before, the improvement of these language models being launched by very small players like an OpenAI, previously a nothing, now, growing very, very quickly from nothing to a couple hundred million, now forecasting $1 billion in revenue. Once again, very small relative to Google, potential disruptor. That is, creates more uncertainty for the stock. So you want to have founders in place saying, okay, how are we going to make sure that this is a seamless experience so that we can roll it out to the next billion users, and ideally several billions of users, roll it out to the majority of the world. And they already have something like 7+ products that are used by 1 billion users every day. So this is something that's in their wheelhouse. They want to make sure they get it right. For example, ChatGPT, if you give it certain prompts, it will give you a very strong BS type answer. And you should recognize that half the time it is sort of like a con artist, where it gives you the full confidence of a wrong answer. Whereas they want to come up with a better version, and they already have one, but they're cautious about rolling it out, where they want to make it easier to click on a button, say, hey, here's the AI's answer. Can I click on it, and will it lead me back to the source where it got this information? Because that sort of read through would be very helpful for this type of model and help you give sort of certainty. Oh, this isn't just sort of a BS con artist sort of language model. This is it can be sort of backed by these other sources. So I have more faith in it. So that having the founders come back and focus on this very real problem, in my opinion, lowers the chance that they completely mishandle this risk. I think they're very focused on it. That said, there are a few key takeaways that investors should consider, one of which is that, you've already seen the business decelerate a bit in the most recent quarter, the third quarter, where their revenue was only 6%, closer to 11% after you adjust for currencies. Their profits were declining on a year-over-year basis. And ultimately, this reflected, once again, the point that I was making earlier, that they made a budget. They had expectations for where their growth would be. Their growth didn't come in. And that's, I strongly suspect, what they're seeing in the fourth quarter, as well as so far the start to 2023. And that's part of the reason why they've announced this 6% layoff to their employee base. I personally view this with a sign of caution, because for me to looking at this isn't a company with limited growth prospects. This is a company valued based on continued growth. This is where investors say, hey, we're still expecting 5-10% growth in the years ahead on a top line basis. So if you're announcing these layoffs, it does give me more caution. This isn't a company that's flat where you need to sort of try to squeeze the margin. So seeing this makes me go, oh, maybe their revenues have been much worse than they previously were expecting. We'll see how it plays out, with their, upcoming quarterly updates and guidance. I think part of the dynamic here and why the stock is up is because you can see over the past decade, it's trading at a low valuation relative to the past decade, a low for on a price to earnings multiple of around a little under 20 times. I personally think that multiple of 20 times significantly actually understates the true valuation here, because it's even cheaper than that when you factor in that you have these other segments like Google Cloud that are still unprofitable and they have a huge cash balance, in which case their core profitable businesses are being valued closer to a low teens or mid-teens multiple. And for really strong enterprises with billion plus daily users, you'd argue, wait a second, should it really be at that multiple? And so you might be at this part, and this might be part of the reason, not only the founders coming back to tackle AI to make sure they have a good solution to ChatGPT. I think another key aspect is, and you see this sometimes with stocks where the valuation gets so cheap that you have it sort of baked into the valuation where, investors say, okay, we were expecting you to announce these layoffs. Unfortunately, now that you did, let's rally because this was already anticipated. Let's move on. The bad news has been baked in. Where does the stock go from here? And that's the point of when you see a stock at a decade low valuation, does that suggest like, hey, the worst has already been baked in? I also think there's other angles to consider. So you're covering a lot of different aspects. One is the likely deceleration. Another is that they're really trying to tackle the challenge from other players in terms of artificial intelligence, trying to beat out OpenAI and Microsoft's investment there. It's also very possible, the third key point, it's also very possible that the valuation got so cheap that these sort of horrendous assumptions were baked into it. I think another core aspect, and this is a lot of parts that investors don't like to hear, is that sometimes the market can just be wrong, where people are just go, oh, okay, let's bid this up. And I personally don't think you've seen the lows for Google stock. That's my personal view. That said, I did buy some, once again, under $90 a share. That's where I thought the price was quite compelling. But I didn't make it a huge bet. I've personally been buying more of two other things. One is a cash cow that trades at a very reasonable multiple, very attractive multiple, multi-year history of consecutive earnings growth, and just very, very stable business, 80% plus recurring revenue. So that's one thing. Another thing I bought, putting more capital to work, is a company trading below liquidation value and has potentially hundreds of percent upside. So that's the type of thing that I'm putting capital to work. That said, I still did buy a little bit more Google stock under $90 a share, back a few weeks back. And I called this out in real time to my subscribers at unrivaledinvesting.com. But I look at Google and I don't think the pain is over. I think we still haven't even really seen the full impact of the economy. It's possible you could even see another layoff in the future. And so as that, plays out, I would consider adding potentially more to Google if I'm able to get it once again below 90 a share. I'm very curious to see, how they allocate their capital, what their revenue growth looks like, in the most recent quarter and what they're guiding to, because the reality is, if they're announcing that they're taking a scalpel to their workforce, and cutting away, 6%, does this mean that they're just trying to clean house and sort of improve their workforce and cut the lowest tiers? Or are they saying, hey, we're having a bigger budgetary problem? That's actually what I think's going on, because 12,000 people is a lot of folks, even if it's only 6% plus of their workforce. And so we'll see how this plays out. I really don't think you've even fully seen the impact of an economic downturn yet. So far, they've posted 6 to 11% growth, 6%, pre-currency adjustments. Then if you adjust for currency, 11%. So I think if you have true recession, that slower revenue growth could get investors to panic and get an even lower valuation for Google stock. And I also want to see how they handle their AI competition in 2023. That's going to be a key part of whether or not I make this a much larger position for myself as I think about Google stock. If you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.